Let's connect with Chakri Lokapriya as well, who's joining in on the show to find out his outlook on the markets. Chakri, thanks so much for taking time out. Let's begin by talking about your outlook then on the markets overall. Given the fact that we have seen that the markets have been on a bit of a declining trajectory, would you describe this as a classic bull market correction? What is your outlook given the undertone for the markets right now, in light of the fact that we're at the fag end of the earnings season with policy on the anvil, and we're not alone in this fall?
Indeed. The market undertone is, I think, positive. We over the next 6 to 12 months, we move much higher. That's simply because the earnings are recovering for companies and various sectors. You can see the infra push is clearly helping the earnings of several companies. And as interest rates peak and then start going down in the second half of this year, we will see an uptick in earnings estimates as a result of lower interest costs and lower working capital costs. So I think while we have had a good run in the recent couple of months, so the market may be a bit sideways in the very short term, but the whole medium term is still very positive.
Okay, fair enough. Meantime, let's get in your take then on Reliance Industries. Just going by the kind of commentary that was made in the annual report, do you think that, Chakri, it's going to be Jio Financial Services all the way as the next key trigger?
Yes, Jio Financial Services, is a company extremely well capitalized. Now is going to be starting off as one of the largest players in the field. It's going to give the other NBFCs a run for their money. The valuation is pretty much on its side, that is Jio Financial. So I think there's going to be a big uptick in its valuation and therefore the valuation of Reliance Industries as well. And, this is at a good time because, credit growth is just picking up. Consumer financing is very strong. And the margins for the industry are still very healthy. So I think that way, the Reliance Jio is very well placed.
All right. How can we forget Zomato? Half an hour into trade, we've not discussed Zomato, right? That's what happens. You go for a weekend, come back and say, oh my God, the biggest stock of the day on Friday. We've not discussed it only.
Nikunj, but we've just started discussing stocks and it's the first one you've spoken about.
No. It is just see, Avan, look at the setup for the fintech and consumer tech stocks. From a feeling of euphoria to an absolute mortuary, now survival and excitement. All shades of human emotions, I think, are at play. If I really look at, forget Zomato, you look at all of them collectively. Paytm was India's largest IPO. And then it has never seen that level. At the beginning of the year, anchor investors were just throwing away the stock as if there is no tomorrow. From lows of sub 500, Paytm is now almost at 800. It's been a remarkable comeback. Zomato, 52-week low, I think it made last year sub 50 or sub 40, I don't recall.
40.5.
40 rupees, yeah, sub 40 or sub 50. 40 has become almost 90.
Yeah, 95.
That's almost like 100% jump. Correct. Policy Bazaar was sub 400. It should be what, 700? 750. These are 100% gains which have come. Nykaa, I think, is the only exception where because of that whole stock split issue and the way the whole exit of CFO was handled, Nykaa is still way below what its price was, and even in this year, it's down by about 5%. So my limited point here is that from this whole appeal that some of these businesses will be high growth business, but they will grow and never make money, that narrative has changed. And for me, I think is the biggest hurrah, because these are the businesses of future. These were the businesses which were incubated by PE money. These were the businesses which now the promoters have realized that, folks, when you are part of the private market, the rules are different. When you are part of the listed market, the rules are different. And that is what they are recognizing. If you're in the auction market, it's about cash flows. If you're in the auction market, it's about profits. If you're in the organized auction market, it's all about dividends and the yields which you offer to minority shareholders. Okay. Now, Zomato, Policy Bazaar.
Yeah, on the charts, of course, these stocks have given returns of 80% to 90% on average. Even Paytm has done, I think, from sub 500 levels to at a point when the stock was at 900 plus levels. Now I think the stock has corrected. So yes, these stocks have done reasonably well. But from a short-term trading point of view, I'm not sure whether these stocks would probably get another leg of fillip on the upside immediately, because most of the indicators on the hourly charts as well as on the daily time frame have entered into an overbought territory. We also look at it in this way that the stocks have a tendency of going through 3 days or 4 days of strong price uptrend and then remaining into a range for at least a couple of weeks before they migrate to a higher range. For Zomato, I think the first major resistance is around 103 mark. So the all-time high levels for Zomato was 169. The fall or the sell-off was closer to 40 odd. The low for the stock, a 50% retracement is closer to 104, 103 levels for Zomato. So I think that's where one should probably try and take some bit of profit off the table and then look for retracements to buy back again.
Okay, Chakri, what should one do with consumer tech and fintech stocks? I mean, the feeling of a carnival is not back, but surely some of these stocks are up more than 100% or 50% from the recent lows.
Indeed. And if you look at the current earnings results of these companies, they've all turned showing signs of getting to profit or almost there. And also the other thing that you must notice is they've all scaled back their growth plans. So I guess they're more realistic today in their growth expectations than they were then at the time of the IPO. At that time, the story was about more cash burn for profits more distant in the future. So I think from that perspective, it's positive. But based on the current earnings growth rates or revenue growth rates, I think it's time you just let them be because their valuations are pretty much up there after the current run-up.
And I bet you didn't know, Nikunj, that now there has been another designation at Zomato called the Chief Fitness Officer as well, who's actually going to look into the wellness
we should call Nayantara our ex-colleague there.
Yes.
That one is up her alley.
Yeah, exactly. It absolutely is. But yeah, that's certainly been no mean feat for Zomato, the way the stock price has moved now at 95 levels.
Yeah. So I'm going to just shift gears and talk about another pocket which is on the other end of the spectrum from new age to classic old age, and that is utility. So why Zomato? I mean, okay, we get excited with Zomato and Policy Bazaar, but if you look at NTPC, PFC, REC, these stocks have also done rather well for themselves. It's just that they are not exciting enough for us to talk. Okay, hello, there's some news. There is some news. Vijay Shekhar Sharma has entered into an agreement to purchase 10.3% stake from Ant Financials. What does that mean? Okay, let's break it down for our viewers. Ant Financial has been one of the biggest investors in Paytm. Now, Paytm in a sense, or Ant Financials in a sense, they've been paring their investment down in all the consumer tech and fintech companies in India. And one of the largest investments in a sense has been Paytm. How much do they own? I'll just be prompted by my research in terms of the total ownership of Ant Financials in Paytm, but I knew that they had a substantial holding. Paytm, Vijay Shekhar Sharma has entered into an agreement to buy 10.3% stake. What else do we have in terms of information? Let's look at it first. I'll just wait. Sometimes you have to wait patiently for the news to be updated. Ant Financial will no longer be the largest shareholder in Paytm. That is something which is important because this was the overhang for the stock. Paytm expected to benefit from the new ownership structure. I'm not so sure that why Paytm would benefit from the new ownership structure, but you can sufficely say that if Vijay Shekhar Sharma has entered into an agreement to buy 10% stake of Ant Financials in Paytm, the overhang that Ant Financial will come out and damage the stock, I think that is something which will reduce substantially.
It's about 23.7%.
Yeah. That's 10%. I've looked
Yeah.
at what is the market cap of Paytm? Let's look at it. Actually, I'll just need my Bloomberg to work for me.
Yeah, at about 50,000 crores.
Yeah, so that's about 10,000, the 50,000 or 50,000. I mean, that's about 5,000 crores Vijay Shekhar Sharma in his private capacity would be picking up. And that's 10% less, and 10% is not going to be such a large overhang because in this case, Vijay Shekhar Sharma has entered into a pact to buy stake in his personal capacity. That's what I think we can understand. Chakri, do you want to react to this news?
Well, indeed, I think one that demonstrates that he has certain amount of conviction in his own company. Second, but to his benefit, it's also he's buying it at a far lower valuation than it was, let's say, about a year ago. 3, by increasing his own personal stake, if that is the one and it's not the company stake, his percentage share in the company, then he continues to have a greater say in board matters and therefore in the direction of the company.
I think for me it was overhang and Ant Financial in a sense. See, some of these stocks, they were completely crashed. They completely went through what could be called as crash landing. in January and in Feb, because that was the time Paytm, Sequoia, just about everybody who had invested in some of these stocks, they were selling without thinking. And now Zomato, well, everybody wants to buy. Paytm, well, the overhang of Ant Financial is going to be reducing significantly. Nuresh, independently of the news today, how's the chart of Paytm looking?
So Paytm is looking interesting, like we discussed last week also. It has come to a retest and a good buying zone. So the stock was 500 to 750 for the last almost 1 year. That was the classical bottoming out formation. We saw that breakout move. We went above 900. And just a week back, the stock made a bottom again around 750 levels. We are at 800 say today. So classical retest done, and the next move should take it beyond that 900 mark, and then go towards closer to say 1100 is the next resistance. So that's the structural view. Very similar to what happened with Zomato, 55 to 80, then took a pause, then now we are at 95. So this is the case happening up. Same has been happening with the PB fintech. So we are seeing a very similar chart formation across. Paytm looks very interesting because that retest is done. It has spent 2 months doing that retest from 900 to 750. And from here on, would be looking at a target price of 900 first and 1100. So a buy at current levels.
Just look at the cash promoter is going to be getting in the company. I mean, this is a very large commitment which Vijay Shekhar Sharma would be doing in his personal balance sheet to reduce the ownership of Ant Financial almost to half, and he now will have 19.4% stake. Now, also remember that the promoter is coming at a price of 700 rupees, which also means that he is ready to buy or perhaps invest his money at even after a run-up of about 70-80% in the stock from the recent low. Unlike the ownership what Vijay Shekhar Sharma, the promoter, had in this entity when he incubated Paytm, now he's putting his shoulder to the wheel, and this again is a indication of commitment. B, the fact that if the promoter is coming at these levels, that also means that they feel that there is value in the stock. That's how I look at the current construct. But I'm going to change the scope of the discussion and move to two stocks which have surprised everybody last week. Kunal, one was IRFC, and second was India Bull Housing Finance.
So IRFC is something very interesting. I think I've been bullish on the railway space for quite some time. Titagarh was one of the stocks which I had highlighted, much prior. But I think now even these railway stocks like IRFC, IRCON, I think has done reasonably well. Texmaco Rail, I think a stock which had been absolutely sideways, that stock has also done reasonably well. IRCTC is making a comeback. I think if I'm not wrong, the stock in the last 1 week has recovered some 6-7%, nowhere close to its life high levels, but then the recovery is also quite stark. Specifically on IRFC, I would be bullish on the stock. Now, after such a kind of a steep uptrend, we could expect some bit of consolidation at this 44-45 mark for IRFC, but I believe that this leg of up move should take the stock higher to almost 52 to 55 levels. So which means a buy and dip strategy could be a good strategy in case if the stock dips towards say 40 to 43 levels. That should be a good point where one could look to enter for a potential target of 52 plus.
Okay, let's move right on then. Stocks on the editor's radar. And Nikunj, we've been talking about PSU banks quite extensively, but it's interesting just mapping out the kind of move that we've seen in the last week or so, especially from some of these heavyweights like SBI, BOB and Union Bank. And the fact that they snapped their 2-week winning streak, and there are a number of factors as well that can be attributed to this.
See, you look at last two numbers, which is BOB and SBI. BOB came over the weekend, SBI came in the second half on Friday, and the market reaction was subtle during the market hour, and now brokerage notes are out. What is important here is that you got to ask yourself is that what is next for PSU banks? The similarity between BOB and SBI, which in my book are the ones which could be a trend indicator for large cap corporate banks, large cap government owned corporate banks, is that credit growth is coming down, NIMs are under pressure. That could also be largely because of the way how the interest or the cost of deposit is moving. While I completely believe that this is not the end of the cycle or this is not end of any kind of a reversal for the banking sector per se, and the credit quality is still very strong, the whole re-rating which happened in the PSU banking space, which was a function of A, valuations, B, they had a huge advantage because of low CASA, and C, the credit growth I think was phenomenally strong. I think that whole re-rating is over. I think PSU banks are in a good spot, but they're unlikely to see what could be called as a perception expansion, which is what you call as price to book or P expansion. Banks will still clock a credit growth of 14 to 16%, depending on the bank which you're talking about. So if you use that as a prism, consider where the cycle and the asset quality is moving, consider that where the capacity utilization is moving. I think PSU banks have a scope to outperform. Bad declines, patches of volatility should be used to your advantage to buy into them. But the linear trading move, what we saw in SBI in 2022, in 2021 and 22, let's say Bank of Baroda in 2022 and 2023, I think the linear move in my book at least is behind us. And these numbers will endorse that banking is one sector where incumbents are important, but the old timers and the big boys, they really have the right to win.
Chakri, let's get in your thoughts. Do you also believe that perhaps that linear move in some of these PSU stocks is now behind us?
And I think Nikunj is absolutely right in terms of, they've had a very strong run. And the one thing which is actually going in their favor of all the PSU banks, that is as we move towards May of next year, the infra spend and all the public government spends is only going to accelerate further, which is good news for all the PSU banks. So the loan growth rate, which has kind of come down, 14, 16%, can kind of accelerate back. We are close to an interest rate peak, hopefully, that is, depending on what the US Fed does and how RBI responds. So which means, again, the NIMs, which have been contracting because of the deposit repricing, that will see some amount of plateauing as we hopefully go into the second end of 2023. And as that happens, then again, the valuations, even now they're not expensive, but again, the valuations, it provides an additional room for further expansion of their profit growth rates.
In news from agencies, supply scenario to continue to ease during July on robust coal production, cut in supply. I mean, this is an IEX, update from the exchanges. We can actually safely ignore that. Nuresh, come in on PSU banks.
So the move has been, it was looking like a breakout, but did not see any follow-up move. We saw State Bank of India come back to 600, 620 zones, flopped around that levels. Canara Bank came back to the previous 52-week highs of 340, did not see a follow-up move. Same is the case with Bank of Baroda. So out here, seems like we get into a consolidation, and then the next time we notice it, whether it can make a breakout move. But the resistances are clear. The supports are still a bit lower for all the names. So for now, we are getting sideways move. Time to relook at the view and get back in only when we start crossing new 52-week highs. Otherwise, the sector could go into a sideways period for much longer than we think.
Okay, now we know the structure. As per the agreement between the parties, Resilient will acquire ownership and voting rights, which means that Paytm stock had overhang of Ant Financials. 10.3% stake of Ant Financial will be picked up by Vijay Shekhar Sharma. But in turn of that, Ant Financial will get OCDs, that is optionally convertible debentures from Resilient, which is owned by Vijay Shekhar Sharma. So the economic interest of Ant Financial in Paytm indirectly does not reduce. But what changes is that the overhang which everyone had, that as the stock goes higher, and financials and other investors will sell, I guess that is something which gets reduced. That is overhang, and that has been a big overhang per se. So that in a sense is a bit of a technical indicator. Now we were discussing Zomato, Policy Bazaar, but another stock which is worth discussing, Nuresh, I think is LIC Housing Finance. Up very smartly, and it massively outperformed last week.
So it came up on the volume radar as well. It was the largest volume since November. That is the time it gapped down, and post that it has been in a tough zone. Every recovery has seen a problem area. Now, the reason it is interesting is if you look at the last 2 years, the stock has had a lot of problems around the 430 to 440 mark. So back in 2021 also, it topped out around 440. Back in 2022 also, it topped out around 440. Even in start of January 2023, 430 was the top. So could this be a start of a fresh uptrend? So watching it out, if it can sustain above the 440 mark, that would imply the stock is finally changing trends, and the stock has done nothing for a long period of time. The stock was at 440 back in 2018, as well as pre-COVID around 440 mark in 2020. So it could be a multi-year breakout, and even in 2015, the stock used to be 440. So can this be a change of trend? It is purely because the volumes have come up to be almost 5x the 5x or 10x the normal volumes. That is where it makes it more interesting. So watching it out today, if it can see, or over the next couple of days, 3-4 days, if it can sustain above 440, would be a buy. Even at current levels, if somebody wants to preempt, it would be a buy. Any fade off today towards 415, 420 levels with a stop loss at 400. Eventually, if this could surprise if it sustains above 440.
The view coming in. In the meantime, we'll also be watching out for the PSU bank stocks on the back of brokerage notes. Jefferies as well has come out with their note on SBI with a target price at 760, saying that the loan growth has moderated from the highs, asset quality as well is holding out quite well. Nomura as well has come out with their latest brokerage note on M&M. They've maintained a buy rating. They've upped the target price to about 1978, saying that the results have been better than expected, and they believe that the investment in RBL has a strategic objective. Lots of question marks, Chakri, regarding that investment in RBL. Your thoughts, and how have you looked at M&M's trajectory and the SUV outlook?
I think the SUV outlook for M&M is kind of, now today there is more competition than there was. The bookings for some of its flagship products is actually kind of slowing down. So while it's still overall healthy profits, I think the margins will kind of start getting hit as you go into the next year. Second is, M&M has been a sum of parts story, and with now the acquisition that they, not acquisition, with the stake increase that they're making in RBL Bank, it kind of again, it questions what are they going to do and how is it connected with M&M Financial Services. So I think that strategic use of their funds is something which will kind of remain overhang until they give you more information or why they're making this particular stake, and not this is a strategic stake.
Okay, fair enough. Meantime, let's also get in a view then on the charts of some of the stocks that did manage to have a pretty decent run up on Friday's trading session. And you did have the likes of an NBCC, which soared about 8% plus, LIC Housing Finance, an interesting mover. Info Edge scaled up and was higher by nearly 8% in trade. JK Tyre and Castrol as well managed to hold out, and so did an MRF. Wanted to get in your thoughts, Naresh, on this entire tyre space and how you're looking at even the likes of a Castrol on the charts?
So the tire space has been in a strong uptrend. We've seen all of them do well apart from Balkrishna. Now, the problem is it's been a stretch of a move in the short term. So, for example, Apollo Tyres, after breaking about 340, 4 months back, has gone up to 440. You have a CIAT which has done a big move. You have a JK Tyres also which has gone up from 200 to 275. The only one maybe which has some more catch up to do, also caught up in the last 2 days, which was MRF. I think the only small cap name which is left is TVS Rechakra. So the whole space has done well apart from Balkrishna. So the view is the trend is pretty strong, but you want a little bit of a dip to actually initiate fresh positions. It would still be a hold because the trends are strong. But going forward, would wait for a dip. In that case, maybe MRF, if it takes a dip, could have some more catch up to do. JK Tyres coming back to 250, 55 could be an entry point. But would be a little cautious for an extreme near-term period because the stocks have moved quite a bit over the last 2-3 sessions as well as over the last 2-3 months.
All right, let's move on and hear out views from our top market experts. Which are some of the most underrated and overrated sectors where one can find right value right now? Let's hear it out from the big market voices.
Point is that longer term, these stories will play out perfectly. In fact, the new age companies that we own as such. But so as I've said earlier also on your channel, what do you look for in a platform? Basically, these are all platform companies. They offer a platform which gives you convenience. Is that an option of converting? I mean, caching that convenience? Yes, right. If there is, are there enough users for this convenience? Yes. but is it easily replicable? I think that is the last question that you need to answer, which has to go in the negative rather than the affirmative. If that is the case, then you want to own that company, and that's why we believe that the ones which we own are fairly non-replicable as such.
Pharma continues to be a defensive bet, but unfortunately, there is no single sector-wide trigger, either positive or negative for the sector. So, to that extent, we will have to evaluate stocks from a bottom-up perspective and then take a call. Yes, in a market which has gone up quite well in the last 4 or 5 months, we have not seen pharma really participating to that extent. And anyways, pharma has been an underperformer for the last couple of years as well. So, to that extent, there is a relative valuation comfort there, but there is no single trigger that can take the entire sector up in our view. So you will have to evaluate them separately.
If you look at it in absolute terms, you might not get that indication that it's going to bottom out, and there are definitely some headwinds. But if you look at the IT index divided by the Nifty, it is at a 10-year support. And I think after Infosys results, a lot of the negatives are already in the price. People are factoring in the headwinds that's coming out of the US and the global markets in general. And we, any which way, live in a very dynamic world. But chartically, I feel that it can only get better from here. But it's not going to be a holistic rally. It's not going to be a rally across the board. So within the top 4, top 6, the ones that we like are TCS and Tech Mahindra. And I believe that these two stocks will stand out and will outperform the IT index. On the other side, if you look at mid-cap IT, there is this digitalization, AI theme-led rally which is taking place across the board, which I think is not going to die down.
All right, where is SGX? What about Asian markets? You got a lot of red. Now you got to ask yourself, is that do you go short or you don't do anything? Naresh, are we going through that patch where for a Nifty trader, it's just one of those no trade, don't do anything kind of in zone? Look, 100 points, 150 points on an index of 19,000, the risk-reward ratio entirely may not be favorable. I mean, you can squeeze out 100 points, you may squeeze out 150 points, but frankly, from a risk-reward standpoint, that's not the trend you want to associate yourself with.
Absolutely well put up. So that's the point. At current levels, the risk-reward is not great. And we've gone through a move from, say, 3,500 points from the lower end of the zone. And we are getting the first consolidation, which is decent, wherein in terms of price correction has been okay. And now there are signs of this period could continue. We did not see a follow-up selling below in a big way below 19,550, 19,600. In that case, we would have gone looking for a short trade, and we've recovered back about 19,500 level. So that tells you there is no momentum on the downside. Momentum on the upside has been clearly weakened with the move. So for now, we could get into a range-bound move, choppy days wherein one day up, one day down could continue, making it difficult for a trend trader to participate. So this is the time where you say, I would not trade the Nifty and the Bank Nifty. Look for stock-specific rotations as they come going forward. And one has to take a fresh view because a lot of stocks which did the rally could pause and there could be new names which would be coming up over the next few weeks.
All right, in the meantime, let's also get a view on some of the breakdown shares. And Kunal, come in on the charts of an SBI. We have, of course, discussed this extensively. And what's your view on a JM Financial as well as Aditya Birla Fashion?
So I think SBI has managed to break a major support. So 600 was a strong psychological support for SBI. That's been taken out. And I think post results, there was no major pullback for the stock price, even on an intraday basis. And so ideally, we look out for stocks which come back to their intraday highs post results. And then even if the stock sell off, we expect that the tendency of the stocks to make a new high could probably limit the downside for these names. But that was not the case for SBI. The stock closed almost at the day's low, again on the back of some extremely heavy volumes, of course, on the back of the results. So I would expect the stock to get into one more leg of downtrend, possibly come back towards that 555, 50 odd mark. So which means a potential downside of another 18 to 20 rupees on the SPI is what I would foresee from current levels. ABFRL on the other hand, I think has just been a stock which has gone through a very mild bounce. So from 350 plus levels in 2022, the stock fell down to as much as 185, 190. And from there, it's recovered towards 215, 216 mark. But I think on the short-term charts, this was just a marginal bounce for the stock price. My sense is that at least for the next 3 to 6 months, the stock should consolidate and get into that phase of a price correction every now and then. So rather than looking at an investment over here, one should just look out for a short-term trade.
Chakri, let's get in some stock recommendations going as well. For the long haul, what's looking interesting in this market that you believe is a lucrative buying opportunity right now? Mid caps, large caps?
One in the industrial space, in the EMS space, companies like Avalon, Dixon, Keynes, all these companies are going to benefit from the government's laptop import substitution as well as electronic products import substitution policies. These companies, even despite this kind of restriction, are going to grow their revenue at about 35-40% each year for the next few years. Bottom line is going to grow much stronger. They have a short trading history because it's a new sector, but the margins are still holding up. And companies like Avalon are moving up the printed circuit board, value chain, and therefore the margins will improve. And I think so because the earnings are so much intact, the top line is so much intact, these companies are good for both the short as well as the long run.
All right.